My presentation would be the simplest of all the three. It's more data as to where the industry is and where is it going, just to give actual numbers and data behind that. Uh, Immediately diving in, we're going to talk about the whole solar industry value chain profit pool side. I think the first principle of wealth creation is find the right pond, find a large pond, and find the a fish that can grow. Uh, we talk in terms of find rate of change and change of rate. Rate of change is the size of the fish increasing, which is find a company which is growing at a good pace. And change of rate is when the pond size itself is increasing. So there in which find an industry which is uh, going to emerge as the next large profit pool. And I think in the previous two parts, it's ample evident that solar is the next, or renewables is a mega opportunity and multi-trillion dollar opportunity with several areas of growth, several industries within that or such. Uh, so this entire industry is at a virtuous cycle now. Uh, the cost curves are declining, prices are falling, which will lead to higher adoption, accelerated adoption, which will lead to more capital getting attracted to it. And this entire virtuous cycle will feed on itself, will snowball. Uh, so this things are happening much faster than we could have anticipated, actually. Just to give a perspective on the actual position where we stand today within the solar industry, for lack of time, we will not go into different industries related to storage, wind, biofuels, etc. We will focus on solar, and that would give a context. So, cumulatively, solar is at 1200 gigawatt. 1000 megawatt is 1 gigawatt. So today, for the last 15 years odd, whatever installation we have done, we have reached 1200 gigawatt. Now, just merely 12 years or 10 years back, which is 2012, we were at 100 gigawatt. I'm sure none of us would have imagined that we would have reached more than 10 times over the last 10 years. So the pace of change is just been unimaginable. So we are doing close to 240 gigawatt of installation as we speak in 2022. But 23, we are going to be exceeding 350 gigawatt of installation. And we wouldn't believe, but 15 years back, this installation was barely 1 gigawatt annually. So from 1 gigawatt annually, we are reaching 350 gigawatt annual in terms of installation. More than 23 countries today are doing more than 1 gigawatt annual installation. There are more than 5 countries today with more than 10 gigawatt of installation annually, even if you exclude China. So China has already exceeded 90 gigawatt of installation in H1 CY23, will exceed 160 gigawatt in CY23. And US and India have the ambition of doing 20 to 25 gigawatt annual installation. That is the pace of, that's the rate of change. Uh, Today the world consumes around 30,000 terawatt hour of electricity and growing, with less than 5% coming from solar. Uh, and the ambition is to get to 15% share in future. So the global electricity stock as on today is 30,000 terawatt hour of electricity consumed, and that itself is also growing at around 3%. GDP growth is around 2.5, 3%. So effectively, 1 terawatt is getting added to this 30,000 terawatt. So 1,000 terawatt hour is getting added every year incrementally to this 30,000 terawatt hour. So this implies that solar photovoltaic installations, which are today at 1,200 gigawatt, will have to become 5,000 gigawatt for the share of solar to become 15%. But mind you, even that stock every year is growing. So it's convenient to say that we will have to go to 5 uh, terawatt or a 10 terawatt in the next few years, several times the current installation. There are primarily four countries or four locations which are driving this: US, China, India, Europe, and within Europe, there is Germany and Spain. So between 2017 and 2022, average installation was 160 gigawatt annually, and now it is going to go to 600 gigawatt annual installation in a matter of 2-3 years. Eventually, it's going to touch 1 terawatt of annual installation. Uh, we always speak about solar, uh, and we mean solar power plants or these solar parks. But then there is a hidden force which is called rooftop solar. These are basically invisible or virtual power plants. Every building has a rooftop solar or getting there. So it's also called distributed solar, which is a rising force. India installed mere 1 gigawatt in CY22, will be doing closer to 2 gigawatt in CY23. But let me give you a context. Even a small country like South Africa has done or will be doing 7 gigawatt of distributed solar in CY22 plus CY23. But I need to bring in US and China context to it. So US penetration of household is mere 4.5%, 3 to 4% today, but it's exponentially growing because US has the house concept, and they tend to have solar on their roofs. China installed 55 gigawatt of solar in CY22. So, really, really just a rising force. Just give me 1 second, please. Yes. Uh, So to give you a high level picture, this is an excerpt from the Intersolar report that was released in Germany this year. The entire stock of installation of addition will grow at 25% CAGR over next foreseeable future. This is just a perspective. For example, China, which is at 400 gigawatt, will go to almost a terawatt over next 4 or 5 years. So it's growing at 25% CAGR for the next 4 or 5 years. I've already mentioned US and India want to do 20-25 gigawatt annually. So just to sum it up and connect all the dots, it's an exponential growth opportunity which is getting driven by energy security transition and manufacturing competence, and this would lead to revenues of several companies growing up exponentially despite uh, a deflation in the realization. On the chart on the right gives you some context of where we are going in terms of prices. Prices are going from 25 cents watt per hour to maybe 6 to 10 cents per hour over the next 30 years. But still, the investment behind them, which is $60 billion per annum right now, will go to in excess of $200 billion per annum. It's important to understand China in the whole ecosystem. China controls the value chain, uh, just like maybe US has their FANG companies. They own the IP for the wafer manufacturing and cell manufacturing, which is the core of the value chain, and maybe inverters. So this time, the technology revolution is actually led by China in this whole renewables value chain. They control 80% of the value polysilicon manufacturing, close to 100% of wafer manufacturing, 85% of cell, and uh, module is the final product. There, China is getting disintermediated by both India, Southeast Asia, Mexico, and even US is planning to ensure some of the production. Uh, so yeah, this is again the rehash of the same data as previously. Uh, the entire value chain is dominated by China, and five regions part of including China and Mongolia are dominating. But I will come to a point to show that India does have a share of this entire value chain, can have a share. This is an excerpt from the Bloomberg Energy Finance Tier 1 uh, third quarter 2023 report, which shows you the size and scale of all major companies. In this, total capacity that is getting featured is 715 gigawatt. Five companies have 380 gigawatt. uh, Longi close to 100 gigawatt, JA65, Jinko 90, Trina 75, Tongwi 55 gigawatt. There is only one Indian company that is featured here, which is Vari Energies Limited at 12 gigawatt. Disclaimer here, it's one of the investee companies for Value Quest, and Dr. Arvind is also on board of Vari Energies. Uh, that gives a context of size and scale, and India is just about beginning to feature in amongst the largest companies. uh, Significant capacity addition over last 9 years. The four uh, uh, parts of the value chain in solar, polysilicon, wafer, cell, module, uh, are really growing at breakneck speed. Maybe some of the software companies grow at this speed, but this is manufacturing. Seeing is believing. So polysilicon over 9 years has added 10x capacity, wafer 19x, cell 55x, module 33x. These are the top 10 global companies. And just to give us a sense of what is the pace of change, the top 10 companies in 2017 shipped close to 100 gigawatt. These top 10 companies shipped close to 50 gigawatt, which is 50% of the total production, global production. And these close to 50 gigawatt has become 220 gigawatt now. So the share of top 10 has actually increased from 50% to close to three-fourth now. And look at the change. Let's say an example, JS Solar, which shipped 6.5 gigawatt today, is almost six times. Longi, which was at 4.5, today is also five times. So, anywhere between 5 to 10 times is the pace of change. Again, global wafer production capacity and cell production Just high level, if you have to see the total capacity in 2019, close to 200 gigawatt has will go to 850 gigawatt in wafer production. In cell production, close to 200 gigawatt will also go to 800. So almost a 4x jump in capacity over 5 6 years. That is the pace of change, mostly dominated by China, but now there is rise of some other non-Chinese. So when we talk about China, we always get a little perturbed that the amount of deflation that they could bring in this industry. But I would want to highlight that their domestic consumption is also growing at a fast pace. They produced close to 300 gigawatt, and their domestic consumption was 140, 150 gigawatt too. So that should also be noticed here. The perspective on global manufacturing, manufacturing in renewables is going to be across the value chain: solar, wind, batteries, EVs, heat pumps, electrolyzer, and it's going to be an exponential opportunity for the manufacturers. Whoever can capture the entire energy transition value chain. There is a lot of forward integration, backward integration, horizontal and vertical integration that is possible for large companies. Uh, One of the reasons this change is so blitzscaling is because of the silicon value chain, or the silicon learning curve that the semiconductor revolution, solar inherited that, or the current renewable technologies are being built on the semicon revolution. So that's why the learning rates are much faster, the lead times are much shorter. uh, I think we tend to underestimate the short term, overestimate the short term and underestimate the long term. Solar or storage or green hydrogen, uh, we are going to see gigantic scale. Solar we're already seeing, but even the other technologies, we are going to see meaningful scale in very, very short periods. Dr. Arvind already have spoken enough about it. Ravi gave a download on the size of the opportunity. Uh, so if you see the graph on the left, US actually, uh, the Silicon Valley is ironically called Silicon Valley because silicon and its technologies were invented there. But eventually, the cost competitiveness, the manufacturing competitiveness moved east. So even though the design elements or IP may remain with US and Germany, but China has actually improved upon it, and now they own the IP. So this is the share of US. In 2004, it used to be 14-15%, and now it's become negligible, and now US is trying to reclaim some share. It cannot reclaim a dominant share, but some share in this entire manufacturing boom. Uh, China, of course, is dominating uh, in multiple ways. So the IRA, covered by Ravi and Dr. Arvind, is trying to accelerate this war of cost competitiveness. We are yet to see how it will play out, but this provides us some context that, driven by IRA, US is going to become as competitive versus the Asian nations. Now, this is where the India opportunity is. So today, India will go from close to 30 gigawatt of module manufacturing to 100 gigawatt of module manufacturing in 3-4 years. India does not yet have meaningful capacities on cell, on ingot wafer, on polysilicon, but over the next 3-4 years, we are going to see some very big shifts. MNRE, which is Ministry of Renewables in India, has the ambition of doing close to 50 gigawatt of renewables every year from today to for the next 5 years. Having said that, there would be some execution challenges, some lags. Maybe we will achieve 25, 30 gigawatt, but I can tell you the intent and the actions of the government are really coming together. We've had some great start, yet challenges are there related to transmission, related to land acquisition, related to costs, but we will conquer those. So the entire incentives and alignment have come together, driven by Atmanirbhar policies, PLI, infrastructure support, a lot of government policies, a lot of tax breaks, state governments doing their own bit. The entire ecosystem is coming together, just like it happened in China. We cannot undermine, cannot underestimate what can happen over the next 4 5 years. Uh, so, driven by a lot of foreign regulations around ESG, uh, this import bans from Xinjiang, uh, some part of China, because of healthy working conditions or labor laws, is giving a boost to Southeast Asia, India, Mexico, Brazil, to really become sourcing hubs. Also, obviously, China plus one factor, supply chain diversification, etc., is adding to that. So, a combination of import bans from China, IRA, and domestic ambitions to put up solar because you want to become energy independent. The confluence of all this is really driving solar adoption, and India has a very big role to play, both in terms of its own solar capacity and also being a provider to the world. So this is proof of the pudding. From January to June 2022, there was not much exports. But suddenly in H2 2022, exports have gone from $50 million to $500 million now. And in 2023, we will see again a very big step jump again. So over the next 2 3 5 years, India is going to see meaningful jump in its export. And who would have imagined that in during COVID, during the Ukraine war, will lie the seeds of another industry manufacturing renaissance for a country like India. Some pertinent questions that we get always thrown at. There are so many moving parts related to solar, which is RM volatility, capex intensity, competitive intensity, technology shifts, regulation, return on capital, and all rightful questions. But these are the building blocks of a company which can create meaningful scale, meaningful profitability. And these are all the building blocks that were relevant for even pharma, but pharma did create its right to win in India, and maybe were relevant for even IT. So I think India, or some of the promoters in India, will find its way around this. Already we are seeing some companies emerge. There is talk about large conglomerates entering this industry, and there is need to do that. So Reliance, of course, is building the whole ecosystem. This will only add to the demand. So I think over the previous two parts, we have shown how big the solar demand is going to be. The conglomerates are only going to add to the demand, accelerate India's right to win in this industry. Now, there is a bit of a land grab happening in solar. There's a lot of orders that are coming towards India and other Southeast nations from US and Europe. But there are only a few providers. So if somebody has to give an order to import 1,000 crores or 10,000 crores worth of orders in the solar or storage or wind side, there are only a few suppliers. So there are only a few partners of choice which have built manufacturing capability, manufacturing certifications, compliance, and all those dots. So, like in most industries, there are going to be only a few players that will capture the size and scale. I've already spoken about Reliance announced intent for the entire 100 gigawatt solar PV ecosystem, batteries, green hydrogen, electrolyzer manufacturing, etc. But this is not a winner take all industry. Like in China, there are so many companies, close to 10 companies which are at meaningful scale, more than 10 gigawatt, more than 30 gigawatts. So this is not a winner take all industry. And we are going to see the same in India. A lot of companies are going to become big. Uh, Technology, China also has the technology, but even Germany and Taiwan have the technology related to this. For now, India will be an importer of technology, not really building the technology. Uh, so India today has all the factors moving together in terms of land acquisition and prices, logistics, regulation, power costs, labor costs, government support and subsidy, and geopolitics. So all the factors of production, all the building blocks are in place favorably towards India to build this whole ecosystem. Uh, Utilizations across these global giants are very, very high. And these utilization numbers, more than 90% utilization, speaks volumes of the capital efficiency of this manufacturing industry. So the same capital efficiencies are going to flow to Indian companies, to Indian promoters. So to cut a long story short, this is going to be a very, very exciting uh, capital allocation related area. Final two, three slides on the industry value creation and profit pool. This is the entire listed universe that is there today. Different segments. There are 6 segments: solar PV manufacturing, solar balance of basically EPC work and other balance of plant areas, inverters and residential solar, battery materials, cell manufacturing, electrolyzer. So the entire listed market cap is almost $1 trillion today, and with revenues of 700 billion and profit of 40 billion. So, and this is just a beginning. There are going to be a multitude of companies, and a lot of technology companies, a lot of manufacturing companies, a lot of IP companies, a lot of consumables companies are going to spring up. So this is the top 6 companies. All I wanted to show up here in this slide was where they have come in the last 5-6 years. So in terms of module capacity in CY18, all of these companies were like 6-10 gigawatt. Now they are like, all of them are north of 30 gigawatt. In terms of revenue, they were at $1 billion to $3 billion. Now they are close to 7, 8, 10 billion dollars. The market caps, which were practically nothing or did not exist, now the entire market cap is more than $10 billion each. These companies. Uh, First Solar, which is a US company and kind of comparable to our Indian peers. This is today our $20 billion worth in terms of market cap. Capacity from 2 gigawatt has gone to 13 gigawatt. Order book has gone from 3-4 gigawatt to 77 gigawatt. Now, every gigawatt is close to 2.5-3,000 crores. So the order book is north of 2 lakh crores. So that is why, of course, market caps will respond accordingly. Uh, More to draw the analogy that IT that got created during Y2K, unfortunately, we didn't have data from 95, but IT profit was 6,600 crores. And these are just the top six companies, top seven companies. 6,600 crores profit of these top seven companies have become 1 lakh crores. I'm sure back in 95, back in 2000, back in 2005, none of us would have imagined India has the right to win in this industry. But today we are talking about a market cap of 6 lakh crores of only a few top few companies. Sorry, this is 60 lakh crores. Uh, right. So that's the end of my presentation. We feel that we are at an inflection point, not only in renewables as a whole in the world, but also India as a inflection point in terms of manufacturing for its own, installations.